Hey guys, this is Danny Nguyen, representing C21 Connect Realty. We're in Roswell. I have a special guest. His name is Rob Hamilton. Rob, could you introduce yourself on like who you are and what you used to do, and
Sure.
to my viewers here?
Sure, I'm the man behind the scenes now. But for 30 years, I was in broadcast radio with many radio stations, most notably here in Atlanta, 99X and Star 94.
Yeah.
So that's where I kind of ended up my career. And now I'm in my second, what do you call it, your second act?
Yes.
Second act now.
So that being said, we have someone very popular and well known in the Atlanta community. Pleasure having you on my podcast.
Thanks, man.
Today, we're going to talk about real estate, right? As you are already aware, I'm a real estate agent. I work for Century 21, specifically in this office. And one thing that I can definitely relate out there is that I am a first-time home buyer. I still live in my first-time home, right? And I can share my experience with you for those who are either in like their mid-20s, late 20s, and possibly starting a family. I have like a 4-year-old at home. I recently got married and like 4 years ago, right before the pandemic, like 2019.
Mm-hmm.
And so kind of want to share that experience with you and how I bought my first home. And to be honest with you, you got to understand the why, right? And by the way, if you haven't subscribed to my channel, hit that like button and hit the subscribe button. So Rob, do you remember when you first bought your first home?
I do remember that.
Was that a scary process for you?
Absolutely. Being in radio, you move around a lot. So I was always an apartment guy. And it was my wife, who was my girlfriend at the time, kind of forced me into it, if you will, because she passed. We were living in Augusta, Georgia, on a station down there, on a station called 95 Rock. And she passed a house on the way to the driving by the Augusta National Golf Course. It was for sale. And she's like, you have to come see this house right now.
Oh, the Masters.
Yeah.
Speaking of which, oh man, Brooks Koepka, come on, you let us down. I thought the live golfer was going to show up. He was like 12 under, and he made it to the third round. I thought he was going to win it. And the next thing you know, fourth round, Sunday.
I know.
All he had to do was just shoot par, and he could have won. But John Rahm came back, and he took it away from him.
Congratulations to him.
Anyway, side note.
Yeah. So she was like, you got to come see this house. There's like someone literally driving a for sale by owner sign in the yard right now, which obviously if they'd had a real estate agent, they could have got more money out of me. Yeah. But I went over that night and sat down at the kitchen table with her and made an offer and bought it the same day.
Can I ask you how old were you when you first bought that home? Like you're in your 20s, maybe just got married, or
30.
30. Okay.
Yeah, I was 30.
Yeah. So that's a typical age for a first-time home buyer, right? So let's understand the why, right? So the why is you got married.
Was going to get married.
Was going to get married.
And my wife thought, I'm not marrying somebody who's throwing money away on rent every month.
Right. So you're basically paying someone else's mortgage.
Exactly.
Right. So let's say if you were in your 20s, you didn't really care. You just had your first job. You're making some money. You're making not a lot of money, but you're paying your apartment, and then rent nowadays is what, like maybe $2,000.
Yeah, more than a mortgage. Yeah,
more than a mortgage, right? So you don't really care. You just play games on your laptop or your PC at home, and you're just working, and then you're going out on Saturday and Sunday, right?
Yeah,
going to the bars, right?
That's it.
We're not talking about Rob here, but we're just talking about, what a typical young person would do, like in America now, right?
Yeah.
So we're talking about somebody who's in like, who graduated from college, right? Who makes at least $60,000 a year.
Yeah.
Have good credit, and they're just working possibly a corporate job, and they have kids, maybe they don't. Maybe they're married, maybe they don't. but it's someone who is currently living in an apartment right now, and they are looking to move, right? So was it a scary process for you to get financing and being qualified for a loan or anything like that?
It was terrifying. It was terrifying because all I had ever done was go to the apartment leasing office and fill out an application and say, here's my pay stub and here's what I make. And they pull a credit report and my credit was fine. And they was like, okay, you can move in whatever date. That was literally, aside from living at home until I was 18, that was literally my experience for 12 years. And then all of a sudden, talking to a lender and filling out all these forms and, they're doing a deep dive on me and everything. It was terrifying.
I can definitely relate to that. I was when I first time bought a home, I was talking to a mortgage banker, or actually he was a mortgage office,
Lender.
Mm-hmm. Well, there's a difference. One, you can work with a mortgage banker, which specifically just work with one bank, or you can work with a mortgage broker.
Right.
So a broker can actually work with different banks and actually get you the best, rate for you.
Right. I also didn't do that. I was with a mortgage banker with a particular bank.
So I know a couple, and they can definitely, if whoever is watching this, like if you're interested, I can hook you up with a couple of people I know. We have a preferred lender here at C21. Mm-hmm. You can work with them, or you can work with someone you like. I preference, I would work with someone who been in the industry for a long time. They know what they're doing, and they can know how to guide you through the process. So you know what upfront costs you need to pay, what's the process look like in terms of being qualified, so that you get a pre-qualified letter. So when you do go look for a house, the real estate agent is knowing what budget you can afford. There's plenty of cases out there that when you go look for a house and you love the house and then it turns out you can't afford it. So you don't want to be in that situation. So you prefer to be pre-qualified first, get a signed letter from your lender, whoever is going to be, financing your loan. So when you go and look for a home, your real estate knows what your budget looks like, what kind of house you like. And then when you find that perfect home, then you can start, that whole process of submitting an offer. But that's way, way in advance, right?
Yeah.
Of the process. So now, we understand the why, right? And being qualified for a mortgage can be scary, but if you have like a decent amount of income, I believe your debt ratio is good. Mm-hmm. You don't go buying a new car right before you.
Yeah. Which I was going to do, by the way. We in radio, we do these things called remotes, which is a live broadcast for 2 hours from a client. So I was doing one at a Jeep delership. Was it Dodge, Jeep, Ram? I think are all three together. And I was doing the remote there in a weekend or two coming up, and I had my eye on this like black Wrangler. I said, "Oh, I'm going to buy that thing. Well, I'm going to buy it. Yeah. Here's what I'm going to do. I'm going to do this live broadcast, and I'm going to talk about what a great client this is, and how, in fact, I believe in the client so much, I'm going to buy a car while I'm here today." Yeah. And I was actually going to guarantee myself many future remotes from this, and I was going to buy this car. And the guy literally almost came across the desk and was like, "Do not buy a car. Whatever you do, we're in the middle of getting you financed for a house."
Right.
And kind of crushed my car dreams for a little bit, but
not for that time.
Put it off for 6 months.
Right. So put it off for 6 months. If you make any big purchases, don't do it.
Yeah.
Because when you go through the underwriting process, right, which the underwriter will check, that seeing your latest credit history and your, proof of income, and then your W-2 pay stubs. They're going to check your income. They're going to underwrite your loan, right? They need to certify that you are able to afford this and that you can make monthly payments on this huge financial decision, right? Yeah. So I've seen a lot of cases where you're about to sign the contract and, get the keys, but it turns out that you can't do the financing. So what happens is that you're going to lose your earnest money, right?
Yeah.
So what is earnest money? So earnest money is just showing that how committed you are to buying that house. Like for example, if I am selling a home and I have a lot of offers coming in, a lot of potential buyers, right? And they're submitting their offers. The higher the earnest money just shows me that they're very committed into buying this home. Because why? Because I am taking that offer. I'm risking my time. There's a cost of doing business when you're listing a home. And then if someone doesn't close, I have to go back and, renew my contract agreement with my listing agent and then put it on the market again, which costs time and money. And, as a seller, I want to move out of that house as quickly as possible. And I want to guarantee that I will move out, right? Because I don't want to be stuck with this mortgage because maybe I've already bought in a second house. I need to move to a different state or something like that, right? So what does that mean? Someone has to put earnest money, like a deposit, just in case if they fold, I will get some of that money back so I can start that process again, right? So it's nothing personal, but at the same time, when you're a buyer, right, you don't want to lose that earnest money because I know it's your hard-earned money that you saved. I mean, minimum nowadays is like 5,000-6,000, right, Rob, for earnest money when you submit the contract, and then you just lose it. I lost earnest money because I, as a first-time home buyer, I was submitting an offer and then I switched jobs. Don't switch jobs in the middle of the whole process.
Yeah, not good.
Right. So that's the first step. Getting qualified and not doing anything crazy with your credit and changing jobs like that or buying a car. So you get proof of the loan, right? You find for the house, and then the next step would be, let's say you go through the process of doing an inspection, right, of your house. You're gonna find some things about the home, especially older homes, right? I know aesthetically, when you walk in, everything seems fine, but then when you've hired a really good inspector or home inspection company, we have a couple here, by the way, that C21, prefers, and they're going to do a really good job of finding all the problems with the home. But that's a good thing. Why? Because it actually gives you an opportunity to negotiate, right? So negotiate in terms of, hey, this place needs a new roof. You got to take off some money off of the purchase price here. I found termites, or I found radon, or something about the home, right?
Water damage.
Oh, that's expensive. Or a cracked basement, flooding, foundation. You want to find things before you move in. One time, sharing my experience, I hired a company, not from here, and they checked all the boxes. This is a relatively new home, but the garage, the car, they accidentally hit the wall. So there's a sheetrock, but they covered it really well with those what do you
cabinets?
Sure. But they're open, but they put stuff in there. But when you're doing an inspection yourself, you got to make sure that every nook and cranny of that house is to be identified. But, that was a small little thing. But if we caught it, we could have asked for more money from the purchaser or the seller, right? So what are the benefits of being the first when you're purchasing a home? So, Rob, if you can go back and replay those moments, moving out of the apartment and moving to your home at that time, what are some benefits that you notice immediately right off the bat?
Well, even then, after running the numbers with the mortgage banker, even after running those numbers and seeing what my monthly payment was going to be and how much less than what I was paying in rent, first of all, that kind of got me fired up right away. I was thinking all the extra money I was going to have. Basically, by moving from that apartment and buying that house, I was able, for the same amount of money, to now have that house, which I own, and that Wrangler, both,
right,
for what I was just paying for rent before. And the feeling of going somewhere every day at the end of the day that I owned was, I can't describe it. I can't describe the peaceful feeling and also prideful feeling that I had that, this is mine. I own this.
Right.
It's dirt out here. I could dig a hole right there and plant anything I want to. I don't have to ask anybody. I don't have to do anything. I can change my fence if I want. I didn't have an HOA because I was right on a street. So there's no strict HOA rules to follow. It was just a feeling like I told my girlfriend at the time I couldn't thank her enough because it was it's probably one of the smartest things I've ever done. And by the way, that was 23 years ago, and 2 hours, 3 hours away from here, and I still own that house, and it's rental property now. So it's an investment property, and it's paid for, and it brings in rent every month.
Yeah. One thing that I do notice right off the bat that you'll see a benefit is that if you do get a fixed rate mortgage, right, your monthly payment, even if you never refinance, it will stay like that for like 30 years.
Oh, yeah.
Like, for example, when I was a first time home buyer, when I first bought my house, the interest rate around was like 5 to 6%, which is it is what it is today. Mm-hmm. I'll share some personal facts about me. When I bought the house, my monthly payment before HOA and everything else, the mortgage alone was like $1,400, which is comparable today. Mm-hmm. However, my rent was around a studio apartment today is probably like $1,800, right? Depending on the area, right? So here's the one thing benefit wise. Rents historically has always went up, and you have no control over that. Either you pay the rent or they ask you to move out. So your finances, especially in today's world, it's always been fixed with inflation and everything like that. Your salary will always be the same, but your cost of living has always historically went up, right? You can see it with gas prices nowadays, especially in rents. Back in 2014, when I bought my house, it was around $1,400. I believe it's a lot more. So what does that mean for you as a buyer? You're going to have fixed costs that you can play around with. And another thing is, recently in the past 2 years, I was able to refinance my home. The interest rate at that time was around 2%. So what does that mean for my mortgage? Over time, when I pay off my principal balance, let's say you make your minimum payments every month, and then you add a couple $100 to the principal. Over time, you will pay off your balance quicker. And when you do that, and then let's say, what happened to me was I saw the interest went down to 2%. I paid a origination fee, which is basically a processing fee to, close out the loan, old loan, open a new loan based on my new balance. So my monthly mortgage actually went down to like $700 a month.
Yeah.
So what a crazy benefit it is nowadays, So mortgage, I still pay like $200 for HOA, but they cut my grass and they cover my roof and everything. So I'm all in for like $900,000 a month. I mean, and it's fixed. It's never going to change because my mortgage is always like that. So to add Rob's point, you're going to have a fixed payment. You don't have to worry about rents increasing on you. You don't have to move all the time because you're trying to find deals on apartments.
Yeah.
You don't have to deal with hassling of moving, like hiring moving companies, moving your furniture in and out. That could be a painful process, right?
Oh yeah.
Rob, do you have anything?
Other than the fact that when you're buying something like that, the first thing you think about is how much is it going to cost me? How much is my monthly payment going to be? Let's be honest. The first thing everyone thinks about is how much is the monthly payment going to be? And when you realize that you're going to save money, that's the calm, peaceful feeling at the beginning. And then about halfway through, somewhere in there, you start thinking about, well, what's my next home going to be? Like when I have another kid and I need, or the kids move out and we don't need this square footage now. Then you start thinking about, well, now this thing's just going to generate income on the back end. So there's this constant, you got every homeowner will tell you you got headaches, you know, you just
Yeah.
like, you worried about this now this is leaking. What are you going to do with that? But over top of all of that are these giant peaceful feelings of, you know, first of all, it's yours and it's not costing you very much. Secondly, it's going to generate income as long as I keep it. And what I did, how I paid mine off early, was about 4 to 6 times a year when I would get, now my job was different. I got ratings bonuses, you know, after sweeps weeks and stuff. So about 4 to 6 times a year, I would take the extra bonus and I would make an extra house payment. So I paid it off early, saved a bunch of money in the interest, and then now the thing just generates income.
Right. So he touched on a very good point right there, is that whatever you put into the house, you're not going to lose it historically.
You're paying yourself
Yes.
to live there.
Right. So essentially, you can actually turn your current home, which you possibly might grow out of, into an investment property.
Yeah.
Which you can claim taxes against.
Yeah.
You can claim depreciation against.
Yep.
But that's like a whole separate topic.
It is. It's a whole other video.
Yeah. So stay tuned for that. But long term, you're not going to lose, right? What benefits you're going to get is that you are going to get a fixed cost and then appreciation on the home. When I bought my home back in 2015, it doubled in price now. Like I bought it for about $190. Now it's worth like $350.
Yeah.
So if I need to sell the home, I can literally sell it now. Also, if you didn't know this, there's this thing called Section 1031 exchange. There's 1032.
I don't know.
Anyways,
You're out of my head.
anyways, if you sell your home and then you have the profits, right? Or say for given my example, $350,000 minus $150,000 for a mortgage, so I have $200,000 cash on hand. Okay, I can actually take that money and roll it over into a newer home and make the down payment, and then I don't have to pay taxes on that because it's going towards the new property.
Right. I believe you can do that every 5 years, and I think it's $250,000 individual, $500,000 if you're doing it joint,
Right.
2 people's names.
So get married.
It's a $500,000
That's
with no
$500,000.
taxes.
That is awesome. I don't know about you, but do you want to pay taxes on $500,000? I don't want to.
No.
Nobody wants to.
No.
So what a great benefit that is for owning a home versus you renting, right? So let's say you move from one apartment to another apartment. Do you get any of that back? All those monthly payments you made? Probably not. Guarantee not.
Somebody told me one time they the way they explained it was they just, you know, say it's $1,800 a month. They just put $1,800 in like a fire pit outside and lit it on fire. They just pay my rent.
Right.
It's gone forever. It's never coming back. And you got to sleep somewhere for 29, 30 days for that.
Right.
That's crazy. Give that money to yourself, right?
Right. So if you're interested in possibly, you know, moving out from your apartment, you notice that rents are getting way too high, or you have a growing family, or you just want to move, you know, hit me up. You know, my name is Danny Huynh, again, for those who forgot my name. Just kidding. You can reach me at 404-966-7419. That's my mobile number, okay? That's cell. You can text me, you can call me anytime, or you can email me at danny.huynh, Huynh, Howard, umbrella, yellow, Nancy, Howard, at c21connectrealty.com, and just email me there if you wanted to. Preferably, you just call me, text me, because I want to meet you. I want to understand your problems. I want to help you any way I can in terms of your real estate goals. And I can definitely hook you up with your figure out what your finances are, figure out what we need to do in terms of steps for you to succeed financially as well as your real estate goals. So with that, and don't forget, hit that like button and subscribe. Okay. Thanks again, Rob, for being on my podcast.
Yeah,
Hopefully have you another time.
Sure.
And if please comment, give me some feedback below, and let me know what your thoughts are. Or maybe we should do a part 2 because this is a very good topic. I think the real estate market right now, which I can go into my next video, talking about the rates, the benefits out there, the whole process of buying a home, what to look for when you're going for showings and stuff like that. Definitely I can do a lot more about real estate. So again, thank you for your time. Thanks for watching, and I'll see you next time in the next episode. Thanks, guys.